Typically, I have been focusing on the jockey a lot more than the actual deals itself. If the jockey doesn't pass my mark, I'm not even going to look at the deals.
Welcome to the American Dream Builder and Investor podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is the Trinity of freedom: time, financial, and geography freedom. I'm your host, Micy Liu, and I have achieved financial independence, and I'm helping many others to do the same. I started out with $5,000 and have really built wealth for my family along the process. Now I'm on a mission to help hundreds of thousands of people like me to do the same.
Hey there, welcome to another episode of the American Dream Builder and Investor podcast. Today, I'm going to start a 5-part series of how to conduct due diligence on your real estate syndication investments, passive investments. Even though some of the questions I'm presenting is for you to think about when you're making a passive investment, it could also be very relevant when you're making an active investment as well, whether you do your own deals or become active partners with others. We'll actually have a 6-part series about the questions you can ask in the due diligence process before you invest in the opportunity. We'll first focus on the sponsors, then the market, then the actual property, the property performance and projections, the actual loans, and the deal structures. So first, starting with the sponsors, the team that you're investing with as a passive investor. Actually, I mentioned some of this in one of the episodes about the due diligence episode, but here we just want to dive into a little bit more. Typically, I have been focusing on the jockey a lot more than the actual deals itself. If the jockey doesn't pass my mark, I'm not even going to look at the deals. So who are the jockey? So typically in the real estate syndications, in the previous episode, I mentioned about there's different types of needs that can make a deal happen. The need of equity partners, that could be passive or active investors, need of skills to find a property and then to close on the property by sending on the loans, and the need to operate the property. So essentially all those people's skills are important. You want to make sure they can take it to close and they can operate it well to sell or for it to continue to cash flow based on the business plan. So you want to evaluate that the sponsors can be very likely to make the projected returns happen. So how do we evaluate that? Here are some of the metrics that I typically look at. First, you want to make sure that this is not their first rodeo, ideally not their second or third rodeo either. You want to make sure they have done at least 5 to 10 deals. That's what I like to see typically. And exited at least 3 deals as well, meaning they have demonstrated success. They know when to exit, how to complete the process, what to look for, and how to complete the entire business plan from beginning to finish, from burning the loss to lease, implement the renovation plan, improve the revenue, and also reducing the expenses, working with property management company, etc. So that's the first thing, just to understand what they have done and how many have gone full cycle. This is a numbers game. And the second thing is to look at what the deals that they have done. Was it a similar type of plan? Is it a similar size unit? Is it in a specific market? For example, recently, I've been evaluating an opportunity in Dallas with a sponsor who has a big footprint in the Houston area. My questions is about how are they evaluating the Dallas market? How are they evaluating the Dallas market and bring on the operations from Houston, which isn't that far away, 5 hours away, to the Dallas market? What are the things they're doing differently? How are they getting their cap rate, understanding of the cap rate of the market? How are they getting the rent comps, and etc.? So those are some of the things you want to understand. 10 deals, are those are like multifamily deals, or are those all mobile home parks deals? So even though a lot of the skills are transferable, but you're using it as a way to evaluate what's the amount of risks involved, not necessarily to say no, but what's the amount of risks involved. And so apart from that, you also want to make sure that they're trustworthy, right? Essentially, when we're evaluating the sponsors, we want to verify two things. One is they're good at what they're doing. And the second, they're not going to run away with our money or try to sabotage things and make us lose our money. So they're trustworthy.
This podcast is sponsored by Life Mission Capital, founded by me, Micy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
So how do you evaluate that? I believe having a web presence is very important in today's world. The thing is, sometimes money is really not the most expensive thing for people to lose. It's really their reputations and also what people know about them. So the fact that if they have a web presence and people say good things about them, it's a good sign to start with, right? If it's someone, they just say, I have 3,000 units under management, I do this and do that, but people don't really know about them. And people don't know how the working experience with them is, it's going to be harder for me to believe that. Obviously, the standard background checks and validation of some of their portfolios, all those are important too. I believe having a web presence is key, whether it's a lot or a little bit, and having a network of people who has worked with them, references are key as well. So those are some of the things we want to know and check ahead of time in terms of their team who's carrying out the deal. And another thing we'll touch on the loan piece is also the people they're working with in closing the loan. That's also important as well. And also the property management, which is also part of the team that they work with, who they are on that specific deal or who they usually work with. Those are some of the key things we really look for when it comes to the part about are they good at what they're doing? And the second piece, are they trustworthy? And the next piece, I believe, is the last piece I'm looking for when looking for good sponsors to work with is how are they treating their investors? I invest passively as well as actively, and I have received both ends of the investor experiences. For example, I have one deal that just received quarterly updates and no distributions yet, and it seems like they're behind on distributions as well. Every time we get an update, things aren't really moving that fast. We'll also have another deal that's doing monthly distributions, monthly updates, even though it's not 10 pages each time, but it's definitely like one pager and give us all the necessary P&L in the Dropbox if we need to look at it. So you kind of see two ends. And I think it's very important when we're working with a newer sponsor, not necessarily their experiences are not enough. And as we're just talking about our relationship with is newer, I prefer to work with those monthly distributions, monthly updates so much better because it gives me a better sense of what they're working on, how fast they're working on things as well. When things are quarterly and I don't hear from them for 3-4 months, sometimes I don't know if things are actually happening. And because a lot of those opportunities we have, they're more longer term opportunities, 3 to 7 years. Typically, I don't really want to wait until a year or 3 or 7 years later to know things aren't heading towards where it should be. So those are the 3 things I really look for in a sponsor, questions that I mentioned to help us understand, are they capable? Are they trustworthy? Do they care about me, my investors' experiences? So hopefully that's helpful to you in understanding that. And to go into the details of some of the questions I'd ask, some of the information I typically would gather, you can check out my ebook at lifemissioncapital.com, the 110 questions to ask before investing in syndication deals passively. I think that would be helpful in giving you some more perspectives to that. And like always, I don't encourage you to ask all these questions. Hopefully the sponsor has packaged all those materials in a way that helps you understand how this works. So until next time, have a great day and let your life mission go wild. We'll see you at the next episode where we'll talk about market and also property specific due diligence questions that we usually ask. See you soon.
Thank you so much for tuning in to the American Dream Builder and Investor podcast with me, Micy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.